Good morning, everybody.
Hey, hey, Mark.
Welcome,
All
welcome to the Jeff and Mark Show. It's good to see everybody.
right, that's the official name. I like it.
It's the Jeff and Mark Show. I think
Good
that's a
job,
great
marketing team.
great
That's
name. Reminder: we're here every Tuesday at 11-ish to talk markets, talk life, and hopefully have some fun as well.
Yeah, maybe a few minutes of life with you, some good stock trades, and do it, man. It's a fun
Absolutely.
time.
You know what is not a good stock trade is healthcare stocks today. They are getting absolutely hammered.
Yes.
United Healthcare obviously is the headliner because they're the biggest. It's down 19%.
Yep. Did you see a lot of unusual option flow before this? Because we have political stuff like this. It's somebody somehow always kind of knows. Like,
Yeah. I was kind of wondering that. So I did dig in. Here, let me pull up the stuff from. I
that's
was,
just one
just
stock I
kind of.
just don't trade because, um, it got hammered so much in the last year, and when people were trying to pick the bottom a few months ago, it's like everybody was piling into it, and the stock barely moved. Like when I see stuff like that, I get really nervous. Like there's a lot of new money coming in something, it doesn't move, and it's already sold off a lot. Like even bigger money knows something out there, so I
Mhm.
kind of avoided it, thankfully, until today at least. But tough one.
Yeah, they're not having a great day. So there wasn't anything crazy yesterday. Um, Nothing really, punch him in the face from uh today. Uh
Yeah.
no, nothing really punching
Well, I'm
that kind of
disappointed.
hit me in the
Government
face.
insiders, do your job, man. Why do you have
I
this kind of
know, I
information if
know.
you're not trading on it?
Now today, what we have is a lot of people closing. We've got put selling, and then you have people kind of closing and adjusting positions. This guy's having a bad day. There was a buyer of the Jan 2027 600 calls a few weeks back.
Those are gonna be
Um,
rough.
Not having a great day. Those are getting absolutely clobbered. They are jettisoning those positions. The most active option in United Healthcare today is those Jan 2027 600 calls.
So he's just trying to close them out for anything right now.
Yeah. I mean, I get what they were thinking, right? United Healthcare has been absolutely, just like you were talking, right? United Healthcare has been absolutely slammed. It used to be a $600 stock. It'll recover. It's United Healthcare. And so I'm going to go out to, 15 months and buy an out of the money call for $10 instead of buying the stock. And when this thing pops back, I'm going to make a bunch of money.
Yep.
It makes perfect
Sounded
sense.
good. Sounded good.
It's
Sure,
a
he
great
talked to his
pitch.
trading desk about that. They're like, "Oh yeah, sounds good. UNH isn't going anywhere."
Yeah, great idea. And then you get news like this, and the trader is essentially forced to exit. The open interest on that strike was 39,000. So open interest is how many contracts were held as of last night. So how many people owned options that were that 600 call in Jan 2027 as of the close of business on Monday, and that open interest was 853, excuse me. And today we've seen almost 35,000 of those calls trade now. So they are exiting.
I wonder who's buying them. Probably the guy who sold them.
Yeah, I mean, that's the thing about being a market maker, right? So this trader, and the way a lot of you folks trade is you buy a call and you hope the stock goes up, or you buy a put and you expect the stock to drop. When a market maker, like I used to be on the floor in Chicago and New York, when I buy those calls, I don't just bank them. I actually immediately sell stock against those calls. So the 600 calls have a 5 delta, which means they have about a back of the envelope calculation, about 5% chance of ending up in the money. So for every 100 calls I would buy, I would sell 500 shares of stock. And what that does is that turns the trade from a directional trade into a volatility trade. I still probably prefer, if I'm the owner, that it go up, but I really more care then that it moves as opposed to going up or down. I just want movement. And so that's
I see it a lot of times in the short-term options that we'll make an alert on something. It gets tons of unusual contracts come in, and then the stock will fade lower. And people was like, "Well, Jeff, why is that going on? Why you picked a good stock? Why is the market got all these options trading? Why is it going lower?" Well, market makers fade these stocks when they see the unusual activity like that. Especially, they try to sell stock and they fade the stock lower, maybe so they can buy options back cheaper. You could probably do the whole rationale behind it, but you just see this a lot. I mean, it takes a few days for that to kind of unwind, but a lot of times initially when there's a big position like that, the stock actually goes down, which is counterintuitive to what a lot of people think. I think when there's a lot of option call activity, we hear this gamma squeeze stuff all the time, so we think the stock's going higher, but in reality, it doesn't happen a lot.
I mean, you get a big order that is market makers hedging their positions is going to produce a lot of stock. Now, sometimes these trades are tied up, and then meaning they do the stock that the market makers would hedge and the call or put options at the same time. But when they're not, it is an absolute race for market makers to exit their stock positions or to put on stock positions against their calls, or puts, to then, again, kind of remove that directionality and turn their portfolio into a portfolio that responds to changes in volatility as opposed to changes in price. But yes, that will actually absolutely be a function of that. So, a trader comes in and sells, or a fund or whatever, and buys 10,000 calls or sells 10,000 calls. Market makers have to take action on that. And so that's often what you see.
I'm looking at those contracts now, January 15th. There's a lot of big positions there. That 500 strike has got 27,000 calls out there too, and all through the 300s, just tons of contracts. So there's a lot of shifting around right now.
I mean, it makes sense if you can find the right vehicle to put on a trade like that. Andrew, my cohort, my partner right here at Option Pit, he actually has a program that he runs that looks for stocks that have rallied 10% off their bottom, that are also seeing heavy leap activity, and he'll put trades on. And that is a way that a lot of these funds will express their long-term opinions. They don't want to sit with a bunch of capital tied up in the stock, so they'll go out to the leaps and buy calls. But every now and again, you're going to run into a UNH story, and it's not going to be a great outcome for that particular trade.
I'm looking at the put activity. It's like non-existent almost. Like nobody was betting on big puts going into January. A lot of those are just zero open interest contracts that would have paid really nice today.
Yeah,
I'm scrolling down to like the 200 puts for January. Those actually have quite a bit of activity. 37,000 contracts in those also.
That'll do it.
Yep.
Yeah, what's
still
interesting?
Not much activity, not much trading on them. But there's a lot
and I'm looking at the large block trades. You would expect on a day where United Healthcare is down 19% that you would see a lot of large block trades, meaning 5,000, 10,000, 25,000. And I'm not seeing that, and I'm certainly not seeing it in put activity. Today, the biggest trade, and this is kind of what I do in Delta Strike, which is the service that my really Option Pit's kind of flagship service. I trade off of order flow. So the biggest trade we've seen today so far was a buyer of 66,700 of the May 330, 360 call spreads. So they are buying the May 330 call and selling the May 360 call. It's another kind of rebound play in United Healthcare. That is opening. And then another big trade is the August 300, 330 call spread. They did that about 3,200 times. And, what's interesting about the flow I'm seeing in United Healthcare is that so many people are just saying fat and exiting call positions that on a day when it's down 20%, right? What a stock is down 20%. What would you think would happen to option prices? Would they go up or down?
I mean, I would think that implied volatility is going up quite a bit. So I would think the calls and the puts would actually go up in value. Relatively, they would go up because the implied volatility should be going up.
Right. The insurance component, right? Not the direct price component, but the part that option traders, market makers really trade should go up. And I'm looking at the option prices in United Healthcare, and United Healthcare options are down. CVS options have barely moved. Humana options are down. So what I'm seeing here today is telling me that the market is interpreting today's moves as these stocks are dead money for a while. So it's almost like a post-earnings trade after it makes its move and you see volatility come in. The market is telling us today is not the day, and probably not this week, to try and catch these falling knives. They're dead money.
There's a lot of people trying. I'm looking at all the call activity even this week, like the tool degenerates for this week expire 3 days from now. There's a ton of call activity here, and the put activity too. There's a good chunk of put activity happening.
Yeah, but
when you get moves like this, you get people on both sides just taking bets here.
You do, but
I mean, it could be a great put selling day. Like it could be.
Oh, it'd be if you
want
to
this week or next week could be really nice.
That's a great idea. If you have confidence that these stocks are not going to keep going, you could go to like a CVS, which is going to be the least expensive of these. And, Jeff, you're right. You're getting, you could sell the 70 put in CVS for next week, and you're going to get 42 cents. That's, on an over half a percent for a 8-day hold. And if the stock drops below 70, you got to ask yourself if you're willing to take delivery there. And I would venture to say that'd be probably a good spot to play around in CVS.
Yeah, CVS has got earnings on February 10th too. So really want to get wild and hold through earnings on this. How much worse are earnings going to be?
Yeah.
It's got to be like, I mean, that's got to probably put a bottom in.
You would think. CVS has definitely been a ride, but there is definitely an opportunity to sell some puts there. The biggest put sale in these was actually in UNH. And
that's the biggest, most liquid guy. So that's where everybody's going to make all the trades. If they think this is bottoming out or going lower from here.
Yeah. And I don't hate this. A trader stepped in and sold. So UNH is $286. A trader sold 4,000 of the March 240 puts, collecting $3.05, and that was opening. So they would be looking at another 20% haircut in order to have these threatened, and they are collecting over 1% on those. That's not a bad little yield play if you've got the cap.
I mean, 20% sounds like a pretty big knee-jerk reaction to begin with. So another 20% on top of that, that sounds pretty aggressive.
That would be,
I think, not a bad trade.
I think you're pretty safe selling those. I think you're pretty safe selling those. Today, the biggest equity trade is actually, this would surprise me. GFS. This is Global Foundries. So they're in the foundry business, obviously. So Intel, Taiwan Semiconductor, so on. This was we saw this type of volume several weeks ago and bought in Delta Strike and bought calls on Global Foundries. I'd never traded before in my life.
Yeah, I can't say I've ever traded this one.
I had never either. But, a trader bought 40,000 of the 45 calls. Okay. Now you got my attention here, bub. And so because there's a lot of overlap there. but in for $3, out at $5.20 in 6 days. That was a 73% return. And now today, the stock.
So just a week ago, you saw that kind of activity happening in that stock.
Yeah, I'd never seen anything in it before, and now they're back. And so the trader bought 40,000 with the stock at $47, April 55 calls, and paid through the offer. So they were offered at 205. The trader paid $2.10. Take a look at that stock chart. It's been a beast.
I mean, it's beautiful. That was a great trade.
So I may go back to this because
I like a lot of these underfollowed names like this, because everybody's trading the bigger chip stocks, of course, right? But look at the percentage move on something like this, and the options on that, of course, are huge. So that's an interesting trade on it.
Yeah, and you know what? It's actually a better trade than I thought. So you're a gambling man, right? You're not like a crazy gambler, but you'll put a sports bet on. You like the horse track or something like that, right?
I get a little crazy.
So, if you go to the horse track, right, and the guy next to you says bet on horse number 6, and then that
I'm not a degenerate horse gambler. Like, come on, that's the worst kind of people. I don't do that.
Well, there's a rung lower. There's a rung lower, and they're called people that go the dog track. So you've got the guy next to you says bet on 6. Put a little on 6, and it wins. When that guy comes to you 2 races later and says, "Hey, put your money on horse 4," are you paying more attention?
You bet. I probably do 5 or 10x my bet too.
Absolutely. And this is why I like this trade so much. So I didn't see the second leg of this trade. This is actually a 2-legged trade. Remember I told you they bought those April 45 calls and won pretty nicely. They paid, I believe, $3. So today they sold that a chunk of that position at $5.50. We're good for 20,000 contracts.
Was it a straight up call purchase? Or was it a call spread they made?
It was a close and roll. So they sold to close their 45 calls in at 3, out at 550, and then they took a chunk of that premium they just took it in and bought 40,000 of the 55 calls. So,
all right, they're still pretty bullish.
This is my favorite kind of trader. When I'm trading order flow, when I see a trader that was right, that is rolling higher and levering up, right? So they collected 550. If they had just bought one of the, 20,000 of the 55s, they pocket $3.40, lock in a nice win and still have upside. No, this trader was like, no, I want more. Bought twice as much. So still pocketed $1.30, but they're still out $1.70 of their initial trade. But they have levered themselves, doubling their size. So you have a trader that was right, that is closing, rolling higher, and levering.
That's my kind of guy. I love it.
That is my kind of guy.
That's a betting man right there.
That's the guy I'm going to be trading with. Yeah, after you and I finish the show at noon every day, I host Delta Strike, and we are going to be taking a hard look at Global Foundries when I'm in session here in about 37 minutes.
I'm going to jump on that one. That sounds good. That one's on my radar, but that kind of activity really gets my attention. Like, people don't make wild bets like that typically. They've done a lot of research. They're putting their money where the mouth is. And, when you see price action like that and people start to be right on it, that's the kind of stuff I like to follow, at least look into more.
Yeah, absolutely. Like I said, I'd never traded before, but, we saw that one trade, and then the next day somebody else came in and did more. And I was like, okay, that's it for me.
These kind of stocks, they're a lot easier to spot on what truly is an unusual option trade, right? Because these don't get that kind of volume.
They do not.
A lot of people like to do unusual option scans on Tesla and Nvidia and Apple and stuff. Like, it's so hard because there's so many dynamics happening and there's so much option activity already. It's really hard to spot like what truly is. It's rare you see like truly unusual options in those kind of stocks, but when you see someone putting that kind of money in a GFS like that should be on your radar.
Right. And those are the names that I find actually pay us out the best.
Right.
Apple, Tesla, they really don't see, there's so much volume and so much activity. It can be kind of hard to discern what people are trying to do. And oftentimes they've got offsetting positions behind closed doors. This is just a straight bet. You know what the average daily option volume is in Global Foundries, Jeff?
Not much.
1,600 contracts, including calls and puts. So this
40,000 contracts should be on the radar.
Yeah. So this trader put selling 20,000 to buy 40,000. That should go on your radar and tell you, okay, this stock is going to move. So again, yeah, we're going to meet with Delta Strike here in about 35 minutes, and I will be breaking down and likely doing a trade here in Global Foundries.
That's great.
And we've been talking a little bit about Delta Strike, Jeff, you and I, and we have something special for Raging Bull people.
This is so exciting. We've been working on this for a long time, so get into it. I'm so glad you're doing this.
So, folks that are here, and everybody that is a member of Raging Bull, you should have received an email or are about to receive an email inviting you to join Delta Strike for zero cost. I think it's either for like 3 or 6 months to just join us and trade along with me. We're also giving you what we call our ticker highlight show. We meet once a week. It's every trader that works with me. So I have 4 full-time traders, and then I'm in the middle of adding a 5th. We each bring a stock we like and a stock we don't like. And then we go behind the pay. We kind of present all those for free to everybody every Monday at 10. And then at 10:30, we go behind the paywall, and the 4, soon to be 5 of us, pick one stock to either buy a call in or buy a put in, and we trade it. And both of these these are our 2 best performing services that fall under, kind of relatively easy to follow, easy to manage. In Delta Strike, we only trade straight calls and puts. And in Ticker Highlight Show, we only trade straight calls and puts. And in fact, I basically only buy. So it's really simple, really easy.
I love it. I've been following along the last few weeks here. I think it's great. I mean, it's good rationale behind the trades, very easy to follow. And if you like the ideas, it's not complicated option strategies. If you like trading stocks, you can just trade the stock ID off it too. But if you like just directional call bets, like it's a great service. Like he's spotting a lot of these kind of ideas. And the price is about the best you're ever going to get. It's free.
Yes.
Mark went out on a limb and just hooking Raging Bull people up, not asking for anything, not even asking a credit card. All you got to do is click the link. I think they just dropped it in chat there. So if you're in chat, it means you're a paid member, and he's going to give this to you for like the next 6 months, I think, absolutely free. So you got to take him up on it. You have to do anything. Just click the link, get access to it, and you'll be part of his service like right away.
And it's a great service. I meet with you every single day from noon to 12:30. Sometimes we go on Fridays. I do kind of free flow Fridays. So after I get done with what I do, I'll take stock requests and I'll look at the order flow. I'll look at the chart and kind of break down what I see in kind of your favorites. And every now and again, if I have time, I'll even take a request early in the week. We put on average 2 to 3 trades a week. I'm pretty discerning about, what options I buy. And the hold time is typically less than 2 weeks. And our win rate is a touch below 70%. And our average return is around 30%. So it's a pretty, and that includes all the losses, right? My wins are way above that, but I report every win and loss and post that track record that you can follow along with. So I would invite you guys to click the link and join me today at noon, and then tomorrow, and so on.
Yeah.
And I'm
CARR trade, car. It was on my radar already, and then you put that out last week. It's like,
yes,
awesome. I love
Friday.
it. I took the trade. I'm already up like $1,000 on it, and it's looking great. I think this has got a lot of potential to it. So I'm hoping to make a lot more in the trade as it goes up. But those little trades like that, not super volatile, it's kind of under the radar trades that are setting up great, and then have a great reason to do it because of option flow and things you're looking at. Those are kind of setups I like a lot.
Yeah, I mean, this was another one where the average daily volume is like 2,000, and somebody's stepping in and buying 25,000 calls. It may take a week or 9 days or something like that, but people aren't stepping in to buy that many calls to be wrong.
Yeah,
and so that is typically what I do. Now, one of the kind of fun things, I don't know if you can tell, guys, but I was, I know I said this, I was a professional market maker. Most of these firms are really good at picking stocks and knowing that a stock is going to go up or down. They're not necessarily expert option traders. And I found that typically when I jump on a trade, I'm going to outperform the trader that I was following, because my option knowledge, I'm going to find a better option to buy something that's going to be a better relative value than what they're trading. Now, sometimes we trade with them and they get it right, but about 70% of the time, there is a better option in the option market than the trade that these big firms do. One kind of firm tendency is they love 5s and 0s, right? Like,
that's true. That's a good observation. That's true.
A stock's trading $27, and it's total 100% true. Stock's trading $27. It has dollar starts, so you could buy the 25s, 26s, 27s, 28s, 29s, or the 30s. Big firms are either going to buy the 25s or the 30s. They're almost never going to buy the 28s. And a lot of times those 28 calls or 27 calls actually end up being a better value. They react sooner, and on a relative scale, they're cheaper, right?
Yep.
When I'm calculating whether an option is expensive or cheap, I'm not actually really looking at what I'm paying for the option. I'm looking at the implied volatility that we talked about at the top of the show to look for that value.
A lot of times also the stock could be at $50 and there's a lot of huge activity at $100 or some way out of the money number. You're like, who in the world thinks the stock's going to $100? In reality, a lot of times not going to think it's going to go there. They're buying something with a low delta, and if that stock moves up on a percentage basis, that trade's going to make quite a bit, and they can scale out of it. But that's months out, and they're kind of betting longer term. But if you're taking shorter term trades with closer to the money, like Mark's talking about, those are like where I think the sweet spot is, the lower risk reward, and that's what tends to pay better. Those big out of the money trades that take a lot of times.
Yeah. There is something to be said to that, right? When someone buys an out of money call, they don't necessarily, as Jeff was just saying, they don't necessarily think that stock's going to end up in the money. It might just be a cheap way for them to express that the stock's going to get a little bit of a bid and rally, and they can make a quick buck. In for 20 cents out at 30, that's a 50% return.
Yeah. We see on stocks like Tesla, like, who's buying $600 Tesla calls right here? Like, well, they're buying a lot of them, but not necessarily think it's going to 600. But if Tesla makes a $30 or $50 move soon, those options are going to double or triple. So that's kind of what they're thinking. That's the logic behind it.
Yeah. Well, when you buy out of the money,
you start to buy the month out calls that are closer to the money, they're going to make sense. Then you're going to make a really good return, not hundreds of percent, but you're not going to take that risk on either.
No. When someone's buying out of the money calls, I'm going to use a big word here: convexity.
Good one.
That's our vocab for the day. And a lot of funds trade convexity. And what they're looking for is Tesla in particular. Thank you for bringing up Tesla, because that is like the classic beast. When Tesla starts to rally, what happens to option prices in Tesla? They go up. And those cheap out of the money options in relative scale, in terms of how expensive the options get, they go up more and more relative to at the money. So you'll get a little bit of convexity there. Typically, convexity is more used to hedge downside. when you see someone buying those crash puts, those little baby hedges, we get a big move down in the S&P. You'll notice those options don't go up by their delta. They go up, on a multiple scale of what that delta was, because out of the money put demand absolutely explodes on a sell-off. And so that's what a lot of these traders are trying to trade.
Yeah. Those black swan kind of funds, they do that all the time. They're trying to buy those mispriced puts out there. Something like UNH, which I'm surprised there wasn't a lot more out of the money put activity, honestly. That was a perfect example of something that had a lot of, kind of black swan risk. It may not pay off, but when it does, like, that's how you kind of make your year, is by buying trades like that.
You're 100% right. And I'm surprised that we didn't see more out of the money put, and I'm surprised we didn't see any front running in this. I would have expected that. And this must have caught people by surprise for once. Usually Washington likes to
like we said, that's rare. There's always someone out there buying this stuff.
Yes.
Like we saw in USAR last week before the government made its big investment. Like, someone just got really lucky with some call spreads there.
USAR is a really fun story. I don't know if you and I talked about it. So Frank Gregory, he's my insider on Washington, in Washington. So generally, if I'm going to hire someone at Option Pit, I want them to help me make money for myself. All right. If I can't make money working, if I can't make money working with somebody, how is like one of our customers, one of our traders supposed to make money with this person? Right. It's a very simple question, right? If I'm a professional option trader, if I can't make money off of your ideas, then nobody's going to make money off your ideas. And he was the original investment banker for USAR. And one of my other partners was actually the CEO that took them public. And so, this is one that we held all over the place here at Option Pit because we've got kind of domain knowledge. I think I gave you the name, but continue to keep an eye on that one. American Resources Corp, AREC.
Yeah, we talked about that last week.
We were. And it initially, when the news came out on USAR, that thing absolutely ran to $5, and then the floor absolutely fell out. It's back down to $3.80. I own it for about $2.40. Anywhere below $3 on this stock, I am a buyer. And then when it gets above $5, I take some of my position off. But I'm always holding a core position of, a certain number of shares in that one, because I think AREC could be the next USAR.
Yeah, it's only a matter of time before the froth comes back in again and pushes all these stocks even higher. It's one piece of news away. I'm kind of surprised that USAR and MP and some of the rare earth guys sold off yesterday after the big move, but it was such a big move. There's just profit taking, of course, but
yes,
the sector is going to be in play most of the year. Like, it's just something you want to pay attention to in these dips here. I was talking about this on space stocks too. Like, we saw the last couple of days. Like, these are great. You want to be a buyer on these dips, not the rallies. So look at these dip times as a good start to get involved with some of the better ones you like. These are themes that are going to continue on the rest of the year.
Yeah, I always laugh at that, right? And everybody wants to own AST Space Mobile when it's 110, and then nobody wants to buy it for 97. And
then next week it's back up and like, oh, I'm going to buy it now. It's like, well,
come on, guys. Have those list of stocks and have a line in the sand on the stocks that you want to own, and don't worry if it's going to keep going. If you like a stock that much, don't worry if it's going to keep going.
Yeah.
All right. Or
scale these things. Like, it's not like, draw a line and say, this is my spot, I'm putting all my chips in right here. Like, if there's a good market leading stock in a sector like space, so ASTS is probably the best leading space stock. On days that's down a lot, like, why not start nibbling on those kind of things and nibble a little more if it comes in some more? These are not going to be dead. The market's going to come right back to them. Same with these rare earth guys. Like, on big down days, like, the market's going to come back. Why not start building positions on lower?
Absolutely. And I think all the hullabaloo over Greenland and then coming to a deal to be able to mine rare earth there shows you how big of a this isn't just a 1-year trend or a 2-year trend. This is like a decades long kind of super cycle of, reducing dependence on Chinese rare earth mining, and domesticating rare earth to the United States, to Canada, to, the Netherlands, which owns Greenland, good actors as opposed to bad actors. So, Jeff, the time always flies. We've been talking for 40 minutes straight, and I always enjoy it. You got let's close on the Federal Reserve.
Hey, last week we had that little USAS trade we talked about.
Oh, yeah.
That thing rocketed. Oh, you were talking about the calls you could do on it. It's like, I don't think it's going to make that big of a move. And then it was like 60% last week.
It was crazy. Silver just game stopped the entire It literally game stopped the market with how crazy that. Yeah. I mean, silver option prices are typically around about a 20. Leading into yesterday, they had gotten to 100 and over 100, so they were option prices were 5x their normal price. Mm-hmm. So just a crazy move in silver. I think gold's got a negative move coming. I mean, I like gold long term, but I think
I love it. Like, I'm like you, like, that's just such a big trend. So much, it's like so crowded. And when it breaks, there's going to be some pretty good downside. I think
it is going to be.
Yeah, Nugget's the one I trade all the time. NUGT.
Oh, nice.
That's the one I'd be looking at for the biggest downside when it does crack. So these things that don't crack easy, right? You don't see like a breakdown one day. They break a little bit, they come back, they try to make new highs. It's a process. I think silver has started to see that right now, and probably most of the big metal things.
I think you're going to see a dramatic increase in margins from the CME at some point, the Chicago Mercantile Exchange, which gold and silver trade on. You're going to see a pretty large margin increase, and that is going to flush out some speculation in those markets, and you're going to have a very dramatic 1 or 2 day drop. But that is probably your opportunity to try and jump back in, because when they've raised these margins, the single 1-2 day moves have been nasty, but then they've gone right back up to rallying.
Right. Yeah, I've been on any big dips on Nugget, I just look to sell puts a few weeks out, and it just keeps working. Like,
yeah,
I wish I would keep buying the calls on it, but I like selling the puts on them. But it just keeps making highs I would never believe.
Yeah.
When it does crack, that's kind of like a 20% downside, I think. And the put options could really, really pay off big.
Yes. Are there any specific earnings that you're really paying close attention to this week? I know obviously we've got tomorrow Microsoft, Meta, Tesla, IBM, Apple on Thursday, ExxonMobil, and Chevron on Friday morning.
Yeah.
I mean, any other ones on your radar?
No, I really look at the big ones like that. And then, so I want to see what they're saying as far as the forward looking, like what's the rest of the year look like? Are they going to keep, what's the rate of growth on their investment in AI and stuff? Because that moves so much of those smaller. And I really like just kind of waiting and seeing what, kind of mid-cap stocks out there make good moves on earnings. Those go on my radar. So I just have a rule: when these smaller mid-cap stocks make a 10% move or so on earnings, like, that's going to my radar for the next quarter. Like, those are the stocks that I want to be involved in. I'm going to watch any kind of dips on those. That's what the market's going to gravitate towards as new trends and leaders. So anything with a 10% move on earnings, like, that's going on the radar. I'm going to start to watch it and trade it.
Yeah. So a name that I'm probably, if Global Foundries had not popped up, traders. So the way I typically like to trade, trading earnings themselves is such a complete crapshoot. My friend Russell Rhodes did this big study, and he studied people buying and selling straddles on earnings. So he bought a straddle as you buy a call and a put, and you bet on the move. And so he ran buying every straddle on every earning stock, every optionable stock he ran buying that earnings straddle across every single stock in the market, and then he ran selling that straddle across every stock in that market. So when you sell the straddle, you're betting it's not going to move very much, and when you buy the straddle, you're betting it is going to move a lot. So which
my guess is that selling a straddle's got to work, because if buying the straddle worked, everyone would do it, and market makers would go out of business. But turns out market makers are pretty smart, and they lose sometimes. But in general, they're right. If they price an 8% move in a stock, it's probably going to be 6 or something like that. And in general, they're going to win in the long run.
So here was the funny part. You're right. The market makers do win. So which side do you think? So you would think one side or the other would make money. They both lost. You know how much they lost by? The bid-ask spread.
Man, that's pretty good. That's an efficient market. That's pricing markets really well.
Yeah. So, and
is it also that you also say, like, are they that good at pricing the expected move, or is that it's like a self-fulfilling prophecy? It's like because they've priced the options there, that's kind of where the options go to, is because that's where they've had big they've sold or bought at certain price. So,
well, I mean, the market, it's not just the market makers in those markets, it's all these big banks, hedge funds, asset managers. So if the market makers underprice an earnings move, it will get bought. And if they're too expensive, it will get sold, and it'll find that equilibrium. So typically the area where you can play options and have an edge to it, and you alluded to this earlier, you wait till after earnings. A lot of times, and after earnings, there's a rush for people to sell out of their positions. And what happens is those options get so oversold. It's like a stock being oversold, but those options get so oversold that if you have a directional opinion on that stock, you're scooping up calls or puts for, at a 10 to 20% discount. And that's been an effective strategy for me. And, Intel looks like it may be time to be playing in that one. I think it's ready to rebound, and I'm seeing some traders step in and trying to buy calls on that one now.
Yeah, that makes a lot of sense after the big sell-off there.
Yeah.
Again, stock is not going away. It's definitely got the support of the government, and there's a lot of speculation going into earnings, so it maybe got ahead of itself. But right around here, sure seems like a good longer-term trade.
Absolutely. All right. Well, we're kind of running up against it. I got to get ready for Delta Strike here in 13 minutes.
All right, gang. Hey, guys, you could be in there in 13 minutes. Click that link. It's not going to cost you a dime. So just get in there, try it. Hang out with Mark, get some good ideas, get deeper into some of the things we just talked about, and see what he's doing. There's a lot of great trades happening. You can get access to all of them. It won't cost you anything. So all you got to do is click a link, put your name and email in, and you could be there in 13 minutes with Mark.
Yes, and I'd love to see you all and would love to interact, and I can't wait to welcome you to Delta Strike. So please take advantage of what Jeff and I have put together for you as this gift, and I look forward to seeing you guys, many of you, in about 12 minutes.
Right on.
And Jeff, I look forward to seeing you next week at this time, because I really enjoy our conversations.
Yeah, me too. It's good stuff. One of the things I don't really have to sweat about is get to talk markets and life, and it's easy. I like it.
It is. Who you got in the Super Bowl?
Oh, Super Bowl. My goodness. Well, I guess Cowboys are out, so I'm not going to once again. I don't know, man. I growing up I was in New England for like 15 years or so. So I saw a whole Brady dynasty as a Cowboys fan. I kind of sat there sidelines and watched it. Really hard to bet against them in this one, but I gotta say Seahawks probably got the edge. They're such a great team, man. So
yeah,
that's a tough one to bet against.
Yeah, I think the line is Seattle -4.5, and that seems. As
a degenerate gambler, man, that's when I kind of like starting to take some Patriots. So I like betting on that stuff during the game when the underdog gets a little more underdog, and it's not. Like, I don't think so. If Patriots get to like a 7-point dog in the game, like I'll start betting on them.
All right, there you go.
I love these Robinhood prediction markets now. That's where I do all sports betting. So I can bet in real time. The spreads are good.
With the
I like doing
liquidity
that.
there
There's liquidity.
is
It's
great.
amazing. Robin is making a fortune on these things. My goodness.
You know what's been the play on these betting markets is Super Bowl MVP. If you've got a team that you think is going to make it to the Super Bowl, your actual best payout is to bet on their quarterback to be the Super Bowl MVP. That pays out, and you can ride that up, and then so like I think Darnold went from at the beginning of the playoffs 70-1, and now I think he's like 8-1 or something like that.
But still,
so you can hold the 70-1. So you hold the 70-1, and then you sell the 8-1, and now you basically own a free massive call on Sam Darnold.
All right, so we'll do a session one time just on sports betting strategy. That's great. We should do that.
I like that idea, Jeff. That'd be a lot of fun.
So many ways to play it nowadays. All the markets out there and how you can bet on these things. It is like options on sports. It's awesome.
Mm-hmm. Absolutely.
All right, so you're saying next year what I need to do is like get all my money on Dak as the MVP of the Super Bowl. So that's the bet.
I mean, that might be a tough one. Although I like your guys' coach, I do. But I think they need a little bit more work on that defense before they're.
It's our owner. It's a problem, not quite the coach. It's the owner problem.
Yeah. Yeah. Well,
I will save that for our next sports betting debate here. So
yes,
that's good stuff. All right, Mark, you ready for it? You guys got 9 minutes. Join it. It's absolutely free. This is a great gift. There's been a lot of changes at Raging Bull last few months. You guys all know that. So Mark's been gracious enough just to offer a couple of his best services, no cost. So if you're already a member of Raging Bull, this is just a freebie for you. Just take advantage of it. So you'll love it. Just go enjoy a few months, learn from Mark, get some great ideas. It's good stuff. So Mark, I appreciate it. Thank you so much for doing that for us.
Of course. I like working with you, and I can't wait to meet all of your members. And so if you've got questions, you can always reach out to my team, support@optionpit.com, 888-872-3301. You'll recognize some of my customer support members. For those of you that know Steven, I brought him over. And I know many of you know Teddy. He's our head of customer care. So give the team a call, 888-872-3301, or email us support@optionpit.com, and we will take, and if you have any problems, they will make sure that you are taken care of.
Yeah.
All right.
Good stuff.
So,
all right, man. Well, thank you so much. I'll see you next week.
Yes. Join us next week, same time, 11 o'clock Eastern, for the Jeff and Mark Show. Have a great day, everybody.
All right. See you guys.